The information in this podcast is current on the day of recording. It is general advice only, does not take your personal situation into account, and may not be suitable for you.
Welcome to Stock Take. My name's Gaurav Sodhi. Joining me today is analyst Angus Donohoo. Hey, Angus.
G'day.
Nice to see you. And also with us from Newcastle is analyst Nick Cummings. Hey, Nick.
Morning, guys.
Before we get started, I wanted to alert all our listeners to our latest fund offer. For a limited time, you can invest in the Intelligent Investor Ethical Share Fund with zero brokerage fees. The fund is a concentrated portfolio of Australian and global equities that allow you to build wealth responsibly with Intelligent Investor's socially conscious approach. Learn more at offer.intelligentinvestor.com.au/INES. Now, back to the pod. When was the last time the three of us were on, gents? Was it last time? Have we done
Last
this before?
week.
Yes, I know. It feels awfully familiar. I feel as though we've done this. We've done this day already, Groundhog Day. So let's begin this with a brand new topic. Gus, you actually published a 3-part series on AI, which was fascinating. I remember when we were going through the interview process, we spent some time discussing AI, and that was when I realized how little I knew about it and how much there was to learn. So I was really excited to see that you were doing a multi-parter on this fascinating question. Now, this is a big topic. I don't want to run through the entire analysis, which is thousands of words and many, many hours of research and years probably of accumulated knowledge. Mm-hmm. But for those who have access to it, you should go check out those 3-part articles. They are a ripper read. And if I may say so, Gus, very well written as well. Really impressed with how writing is coming along.
Thank you.
The question I want answered, I think the question we all want answered is this. How do we say your last name again? No. Well, it's not that one. It's the one about it's the one about bubbles. AI to me feels like a bubble. I lived through the 90s internet bubble, and I've seen many bubbles where hysteria, mass participation, sky-high optimism builds. All those things are in place with AI. And yet there's this lingering doubt in my mind that this is a proper bubble. It feels like one, but I don't feel like I have enough information to really assess if there is one. You're the man for the job, Gus. Is there an AI bubble?
I think there definitely is in certain places. There are valuations attaching to things that have, I don't think, any real, there's no underlying quality to what that valuation represents. But I think there are other places where you've just had this extraordinary consolidation into these very, very large-scale technology companies. They are positioning themselves by investing a huge amount of money, so they're kind of creating almost a cycle, I think, a cycle in itself. Their valuations, when you actually look at them on a historical basis, they're actually not trading at any significant premium, at least the hyperscale companies, that there's the so-called hyperscalers. So your companies like Amazon, Microsoft, Google, even Meta kind of fits in there too. They don't look historically expensive, but the demand that they're kind of pulling through, I think, is creating bubbles in certain places. But then you also have other companies that really are not related to AI at all, that are using it as a buzzword to inflate their valuations.
Yes.
You know, you can sort of transcripts of earnings calls now, you know, they're filled with mentions of AI, even companies that it's really not kind of central to their business. But I think that reflects in a way just how pervasive a threat AI is to a large number of businesses.
Yeah, and you can tell, it's got this feel to it. Everyone's talking about it. Every business is trying to become one. There are hot IPOs launching. Nick, do you agree? Is there a bubbly feel in the air?
I'll probably push back on a little bit on it. I think there's definitely a bubbly feel in the air, and there's evidence that there's one forming. But unlike, say, the internet boom or some of the other bubbles we've seen, there isn't that hype, I don't think, yet. Like, if you look at IPO statistics, they're nowhere near. They're pretty muted still. you're not getting or at least I'm not, your neighbour's not telling you about the next hot stock.
Although I will say that every amateur investor I own, I know owns my army of
the
minions.
Cult of Gaurav.
Yeah.
Sorry, every amateur investor I know owns Nvidia. I was just running through that. I think everyone who dips, these are very intelligent people, but they're not full-time investors. But every smart investor who isn't a professional owner owns Nvidia. That's in a level of participation I have not seen since the lithium boom.
And I guess my pushback just specifically on NVIDIA then is NVIDIA's price to earnings multiple is lower than REIT's.
Yeah, you're right.
And so I think what might be happening here is I think we are in a period of overstretched multiples as a market, and we've got AI and we're sort of trying to shift blame somewhere, but AI doesn't explain why CBA is expensive, GYG, Costco, like a number of other companies that aren't beneficiaries and aren't even pushing the topic that much. So I don't know if we're like in a bubble yet. There's evidence that some evidence there's one forming, but I don't know if I would say we're in a bubble. And you can point to, as Gus did, some of those mega tech valuations and even compare them to the previous booms, and they're pretty reasonable. Like Google, not so much Microsoft, but Google and Meta traded sort of at market multiples or below market multiples. Microsoft a bit above that, but it arguably deserves that valuation.
I think the other thing that if you do attach that sentence of it's a bubble, that the most famous sentence that attaches to bubbles is "this time it's different."
Yeah.
And I do think that here there is an quite authentic "this time it's different."
Dangerous words, Gus.
Very dangerous words.
Are you going to say it? Go on, say it.
I mean,
it's different this time.
This time it's different.
He went there.
You have tools. The wheel, sliced bread. Already, these things are likely the most useful tools humans have ever created.
Hang on. What about cargo pants? You left that off the list.
That's true. And shoes with zippers. So after those things, they are profoundly useful. But I guess that's the thing, right? The internet was profoundly useful, and you had a lot of stocks that traded to a crazy place that have ended up not having any bearing on how useful the internet was. So maybe there's a similar situation occurring here.
But this is the problem. Every bubble is born from a kernel of truth. Most bubbles start with authenticity and genuine world-changing technology, and then they inflate and expand, and hyperbole and emotion takes over. I think I would agree, Nick, that although there's froth and it feels kind of bubbly, these valuations are puzzling because they are not bubble-like valuations. Gus, something we've discussed internally is that the spending on AI is leading to a lot of earnings growth for a business like NVIDIA, but that spending, is that sustainable, or is that the bubble part? Is the spending actually the bubble and not the valuation, not the multiple itself?
Well, it's interesting. I think if you start to look at it from the terms of how much profit these companies are actually generating, so to kind of step back a little bit, essentially what's been occurring is there is a new class of neural networks. To train those neural networks, you need a lot of GPUs.
Yep.
Essentially, the intelligence of these models appears to scale with the number of GPUs you apply to it. So there's kind of a pretty clear path to building smarter and smarter and smarter and smarter AIs by just adding more GPUs to the problem. And it's not just GPUs; it's also high bandwidth memory, and it's these other players that get kind of sucked into it. So to turn back to that question of spending, as a percentage of, if you look at the capital these businesses are investing, their capex, if you look at that as a percentage of their earnings or of their operating cash flow, it's really not that much. Most of them are spending sort of somewhere in that range of, say, 70%. And then there's spikes in certain quarters or certain years. But they don't look like they're really spending wildly over their skates. Meta got a bit extended, but most of that CapEx was more into virtual reality rather than into AI. So in terms of the sustainability of this, it looks like it's got, it can run for quite a while.
Yeah.
The CEOs are sort of saying the same thing.
Yeah.
They're sort of saying, we don't know where this is going, but we can't afford not to invest in it. And I think as long as they're seeing these scaling laws continuing, as Gus was talking about, where more GPUs are improving models and they're getting a return on that, I think you'll continue to see it. But it could be we wake up one day and it goes, we made a mistake. It's very hard to know.
Nick, you made an interesting point, again, in a proprietary discussion, in a private discussion. You made an interesting point that their behavior reflects a lot of what these businesses have missed in the past. So Microsoft completely missed mobile. You finished the point, because I think that was quite interesting, and it explains their enthusiasm at the moment.
Yeah, I think just broadly, I don't think any of the mega tech companies, or the ones below that, want to miss AI because they have missed previous trends. So Microsoft missed mobile, and Apple always had an advantage, but then Google came out with Android and sort of that should have been Microsoft probably. They had the operating system for the computers but couldn't get the one for mobile. So and this has happened in other areas. Microsoft almost missed cloud computing. Amazon came in there. And then sort of all those big tech companies missed social media to a degree. And Meta was the winner there. So I don't think any of them want to miss this at all. And they are spending tens of billions of dollars to ensure they don't. And for the moment, their profits are growing, and they can easily, say that spending's worthwhile and within our budget. But it'll be interesting to see if profits slow down at one point and if they keep going with that spending. At the moment, there's no sign of it, but I guess you never know. Like, the advertising market's recovered from 2022. Where it goes next, who knows? But if Google and Meta start growing at, say, 8% instead of 15 or 20, and their CapEx continues to go up, maybe they're going to get a lot more questions from investors. So at the moment, it's just all in. All the chips are on the table, but it'll be interesting to see how long that remains.
I think a problem that's coming here is that there is, and what is, where I think what's spooking a lot of people and why there's a lot of talk about a bubble is there's a real mismatch between the amount being spent and the actual products that are being created and being used. And so there's a real disconnect in the terms of the numbers of users for these products and the amount that's being spent. So the CEO of Oracle, Larry Ellison, his CTO, one of the founders, the key founder of Oracle, he talked about it the other day, and he said that you're really looking, your table stakes was basically how he phrased it. Your table stakes for entering this game and building a next generation of foundational model, which is kind of the sort of the brains in a box essentially, is about $100 billion. Microsoft are building a nuclear power plant to service one of these things. You need, Ellison reckons, you need acres of GPUs, a nuclear power plant, and about $100 billion. And that's just kind of to get your foot in the door. So to be putting that sort of investment when you don't necessarily have a clear product in mind, that's pretty ambitious. But that's kind of the place where we're at. And the prize that they're seeking, though, is you're getting these things that are outperforming humans now to a wide variety of tasks. So what is the value of that? And, it's such a non-linear the outcome is so disconnected. The potential here is so disconnected from the current situation that you can see why companies are really in this kind of grand race for this prize.
And this kind of reminds me of what old school science was. It was always tinkering, trying things, building upon what's already been built without any firm product or expectation at the end of all that in mind. And that's what these big tech companies are doing, just on a much larger scale. And historically, we've all benefited from that sort of science, aimless science, I'll call it. And this feels like an aimless science experiment, but we've all done very well out of that in the past, and I actually am all for it. And I think it's really important that this sort of stuff gets done. Although I will say that I find this particular subject area, AI, absolutely terrifying, and partially that's because I've seen too many sci-fi movies. But there's I think there's a lot of excitement here without much caution, and we're actually creating. I think it was Yuval Harari, the author of *Sapiens*. He's talking about how this is the first technology in human history that is not only a tool, but he calls it an agent. So it's a self-thinking, self-organizing technology. And that's what makes this unique. And that's what should prompt some more caution. And nowhere is that caution evident. We're just going headlong with money, resources, and enthusiasm.
Well, one of the ambitions in writing this was that, you see, frankly, so many bad takes in the media about AI, or what I consider to be bad takes, and a lot of it, I think there's an incredible fear response that these machines trigger, because the human has been the center of the universe. Most religions, most ideas of spirituality, that there's this conception that we are somehow special, that we have advantages over the natural world. And the science here, a lot of the foundations goes back, some of it to the late 19th century, but really into the sort of 40s and 50s, and this early idea of neural networks. And, back in, there was a course, a sort of neural network course at UNSW that a guy called Peter Slezak teaches. And I took it in about 2005 or something. And he was already, they were already sort of pointing to neural networks, and there was just a disconnect between, it was sort of known that brains were these connections of neurons, and that if you just scaled more and more neurons, you would essentially potentially be able to replicate the human brain. But there was this huge disconnect between the hardware and the ability to simulate intelligence. And I think what we're seeing here is an intelligence intelligence is not what we thought it was. I think that's kind of becoming increasingly evident, because one of the things that's so extraordinary here and remarkable and potentially frightening is that you do need to train these AIs in these giant data centers, and you need $100 billion worth of GPUs. But at the end of that, you've got this trained piece of software that's incredibly light, and that you can potentially just spin up on a laptop, and it can outsmart you.
Yeah.
And in a way, we've been losing at, chess video games for a long time. So in a way, there should be nothing new about that. But I think that all these areas that humans for so long presumed that were sort of sacred areas of our own excellence, in art, in literature, we're actually getting completely smoked by these machines on aggregate. There's still specialists who are going to outperform, but in terms of scale, in terms of velocity, we just have no answer for this. And it's really turning into something that is not, I don't think it's what people were expecting.
There seems to be a hesitation to call these algorithms, these machines, thinking or self-aware. But under any traditional test of consciousness or intelligence, these things are almost alive. I mean, the Turing test has been long surpassed by these machines. And that was for a long time the standard of how to measure self-awareness and intelligence. And there's all these other tests that have long been surpassed as well. And we keep moving the goalposts and trying to convince everyone that these are just pieces of software, but they're increasingly looking much more sophisticated than that. Well, that's my take. Anyway, Nick, sorry, are you going to say something?
It's kind of interesting when you think about, throughout human history, there's been a massive advantage of having a higher IQ than someone else, and maybe with artificial intelligence, it doesn't matter as much. So, like, if you have a 90 IQ, but you can use AI to boost you up, maybe that gap between you and someone that has 140 IQ is much smaller. Or maybe there's no gap if AI's got, the equivalent IQ of 200 or 500 for us humans. So I think that's kind of scary, and it's kind of a society thing we'll have to, grapple with as sort of this technology progresses.
Make up from the mind, Nick.
One of the things that I found using it is I was doing a project where I was writing a little bit of code, and I'm quite a poor coder. I'm really not very good at it at all. But using the AI to basically be writing my code, and then if I had a bit that wasn't executing, that wasn't working properly, asking the AI, copying and pasting it, putting it into GPT-4 and asking it to fix it for me. It was like it improved my ability at coding by a factor of more than 10, maybe by a factor of 100. So it made me, I'm still nowhere near as good as a good coder, but it made me at least 10 times better than I actually am, if not 50 or 100 times better. And that is such a kind of a transformation in the way that a dummy like me can code. And I think that speaks exactly to kind of the world that we're starting to see emerge.
All right. Well, let's bring this back to some sort of stock talk as well. The business I think that we've come back to again and again is the same one everyone keeps coming back to, which is NVIDIA. Nick, we kind of had this discussion about it when you wrote it up the first time, that it actually doesn't look too wild. It has a genuine software moat with CUDA. And we're really in the early stages of this massive investment boom, which could go on for many years. Where do you sit now on NVIDIA, having seen it for a little bit longer?
Well, I guess first we need to rewind about $2.5 trillion of market cap ago and remind everyone how I missed this. I was very aware back then of CUDA's advantages, but what and NVIDIA's lead in GPUs, where I think it's got like 90, maybe 95% market share, and certainly almost 100% market share of those really advanced applications. But what I got wrong was just how much money was going to go in behind this, and how even without perhaps an ROI single, that these companies were just going to go helter-skelter with CapEx. We're talking about the hyperscalers here, and how much of a beneficiary NVIDIA was going to be. And I mean, looking at it now, I don't see that changing. I mean, certainly in the short term, all these companies are signaling they're going to spend more next year and more in the second half of the year than they have previously. And eventually that finds its way to NVIDIA more than anyone else in the chain. And so it's hard to see things changing in the short term. I am a little bit wary that this is now probably more in the share price than it was previously, and also that semiconductors throughout the history, that they do go throughout cycles.
Yes.
They go through cycles, and so it's. I don't think anything's changed with that. At some point, the capex is going to flatline or won't grow as quickly as it is, and eventually that will hit a business like NVIDIA. But it's hard to see it at the moment. I'd probably say it's somewhere like fairly valued. I don't think it's cheap, but it's certainly not expensive. And we're not talking about it in the same way as we probably talked about Cisco in the dot-com boom in terms of valuations. Though, ironically, I did compare it to Cisco a year ago in my article. But that was another thing I was wrong on.
But there are other high-quality businesses, even here in Australia, as well as ones overseas, that don't have the growth of NVIDIA, that are trading on far higher multiples. And we've discussed those in the last poddy as well. Things like Reese, which is trading on some crazy multiple, to a lesser extent, I'd say probably ARB, but we know what they are, all of them. We've mentioned them many, many times. I mean, what Goodman Group is on 50, 60 times. They're all, we all know what they are. Pro Medicus is 200 times by now or something. It's just, these are very, very large multiples for businesses that are growing far slower.
Yeah, and I think that's sort of the point I was bringing up previously is maybe AI is just happening in another bubble, like in a general overvaluation of, or a multiple bubble in terms of people are paying 30 times earnings where they used to pay 20. I mean, CBA is the great example where everyone used to pay 15 times, maybe 16 times. Now they're paying 25 times. Maybe this is just unfolding in another sort of market environment that we haven't seen sort of before.
Yeah. Final word goes to you on this, Gus.
Yeah, I think it's really interesting to look at the company landscape. What we sort of tried to do in the report was draw out kind of key areas where there are these businesses. So, so the hyperscalers we've talked about, the GPU manufacturers we've talked about, the GPU designers. You've got these memory companies, but you've also got some pretty interesting inference companies where you're running the pre-trained AIs, you're running them close to the end user. And you're not seeing, aside from really in the high bandwidth memory space, and memory always is very cyclical, and in some of these GPU designers, aside from in those areas, you're not it's not prima facie, at first flush, it's not immediately obvious that there's a bubble here. I do think there's extraordinary value being created, and we're really moving into a kind of a new space. I think we've talked about it in a previous podcast. Where things could really start to disconnect is if you've now got Meta have open sourced their foundation model. NVIDIA have just released an open source foundation model. Once the open source foundation models, if they start to get more use, CUDA is under attack. NVIDIA's software development kit that only NVIDIA workloads, CUDA workloads only run on NVIDIA. That's how they've really kind of entrenched their leadership in this space. But Meta have PyTorch, OpenAI have a software language now that's getting adopted. I think it's a dynamic space, but I think it's not immediately obvious to me that there is a bubble here in a lot of this stuff, and I think there's a long way to run. But I also think there's plenty of opportunities to lose your shirt. It's a hard one to pick, as it always is.
Okay, let's leave it there and move on to something much more easier to understand, which is the global lithium market. So this week, last week actually, we're recording this a little bit earlier than usual, but last week there was Rio Tinto's confirmation that it would be taking over Arcadium Lithium, which is the old Allkem, which is the old Galaxy Resources. So it's one of the largest lithium miners in the world. But what really separates Arcadium is that it not only has a crappy rock mine, spodumene mine in WA, which I think is going to be shut down. It's always been a poor mine, which is why we've never been interested in it. It's got some brine assets in Argentina, and I've always been wary of Argentina. Argentina, at the turn of the century, in 1901, when Australia was federated, Australia and Argentina, I believe, had the highest living standards in the world. And it is fascinating to track the trajectory of those two countries over the next 100 years. Australia, of course, went on to be one of the richest countries in the world, a developed Western democracy with the democratic institutions and the liberalism that we all know today. And Argentina went down a different path. And it is something of an institutional basket case, which occasionally has bursts of economic growth and normalcy. And I think we're going through one of those bursts now. There's a new government in charge, and they're saying the right things and doing the right things. But this is a fragile country with fragile institutions, and I'm far from convinced that this is the right place to be spending billions of dollars in acquisition money, let alone the billions of dollars in investment capex needed to extract a vital commodity. So highly nervous about the enthusiasm for Argentina as a mining destination. It just does not have the history of stability that you need in a country to support big scale mining. But Rio disagrees. I was on the call, and the chief executive of Rio Tinto was very enthusiastic about Argentina. He thinks the new regime is a game changer. We'll have to see about that. There are a couple of things I want to bring up about why this is important for the lithium industry. It's not just that a major has now gone into the lithium business and taken over one of its largest producers. It's also the fact that I think the fact that Rio Tinto is making a big acquisition at this time is important. Rio Tinto is, and I guess all big miners are famous for buying the wrong thing at the wrong time. This is one of the few instances I've seen of a big miner acting counter-cyclically, and that's to be applauded. After a decade of pretty good discipline and capital allocation, they're spending money, but at least they're spending money at the right point of the cycle. I'm not convinced this is a great move for Rio Tinto, but it is more sensible than some of the stuff they've done in the past. And as a reminder of some of the crazy stuff.
Low bar.
Yeah, I was going to say, not blowing up the gorge.
That it is. They bought Alcan, the world's largest aluminium producer, at the height of the aluminium bubble in the mid-2000s, for a stupid price, and they wrote off about $40 billion on that acquisition. They bought a coal miner in Mongolia at the height of the coal boom in the mid-2000s, a stupid project at a stupid price, and they wrote off the entire thing. So this isn't that. This is not a singly bad decision, but it is, I think, a more risky one than management might be acknowledging. I'm at odds with management about the risk of Argentinian investment. But the other thing to point out is that they are buying an integrated. The reason they wanted Arcadium specifically over another producer, say Pilbara or Patriot, which is a developer over in Canada with a big project, is that Arcadium has integrated the mining of lithium with the production of battery-grade lithium hydroxide. Livent, which is the business that Allchem merged with, has been a decades-long leader in the processing of battery-grade lithium materials, and they have a lot of know-how and processing technology. And this is a change as well. It shows you that that Rio Tinto believes that it wants to own not just the mining part of the value chain, but the entire processing part of the value chain. This is similar to Rio Tinto or BHP buying not just the iron ore mine, but the steel maker as well. That's the equivalent here. It's quite a large change in strategy. I'm surprised by that. Chris Ellison, who of course runs MinRes, has said many times that he reckons that the processing of lithium is a dead end, that you earn very low single-digit returns on capital, whereas the mining of spodumene can earn you double-digit 20% returns on capital. And that's why he's focused on the mining part of the value chain and will be ignoring the higher-end processing. So this is also puts MinRes and Rio at odds. And famously, BHP has outright said that it's not interested in lithium at all. So it also puts Rio Tinto at odds with its major competitor. So I think this is a big deal for the lithium industry. It's a big deal for the mining industry, because all of a sudden you've got one of its largest constituents, Rio, making a differentiated investment from almost anyone else. And that's going to be, they're either going to look like geniuses or look like fools. And I kind of admire that about them. But I think I'm not convinced this is the right move. I think from my point of view, and I could be wrong. I think they've made an error here. I think they bought the wrong thing. I wouldn't have bought it.
Can we get any sort of takeaway by the price they paid as what that means for some of the other players? So like Pilbara or MinRes, the valuations there, was this a massive premium? I know that the commodities, down the gurgler at the moment. But yeah, is there any takeaways? I know they're not integrated like this operation is, but
no, they're certainly assuming higher than spot prices, because at spot prices, this business makes no money.
Okay,
they need a lot of investment. In fact, Arcadium, without the resources of Rio, I think it would have been in danger of winding up. They had no resources to invest in new production. There's a couple of interesting low-cost assets there, but brine is such a such a mysterious art, because you're basically boring drill holes for water, for mineral-rich water. You're creating these very large evaporation ponds, and you have to sit around for 18 months to 2 years waiting for the sun to evaporate the ponds and concentrate your lithium for you.
Just imagining senior management with their deck chairs sitting there.
That's what they do. I think, look, during the call, one of the interesting points they made was that Rio Tinto aims to bring new technology. They're going to partner with Livent, and they want to bring an end to this business of the ponds. I think they want to pursue what's known as direct lithium extraction, which is digging for boreholes, getting briny water out of the ground, and then process as you go. So no more evaporation ponds to concentrate the lithium. They want to use filtration techniques to get higher grade lithium water straight out of the bore well. This is something that businesses have been trying for 20 years. Rio can bring to bear a lot more resources and manpower than anyone else in that industry can. And if they can crack the direct lithium extraction, then all of a sudden the economics of their acquisition gets a lot better, and that has profound implications for the rest of the industry. I think that means that the entire cost curve for lithium falls quite dramatically. Not only do you get a lower cost extraction, but your yields sort of triple on brine. And I think that's what this is. I think what this is a $10 billion option on cracking a technology that can change the economics of this industry. And if viewed that way, not a crazy idea. And look, I'm not sure how far Rio will go in pursuing that, but if I would imagine that's what they're after. That's what they're doing here. That would be the smart thing, would be to try and use DLE technology to try and actually transform this industry. And if that's what they're doing, that's more interesting. But look, we've been negative on Rio for some time. I think they're making some capital allocation mistakes, pursuing some projects which I'm not so sure about. And I think BHP is just a nice, safe pair of hands. But even there, you're seeing much higher capex and even acquisitions happening. So I think the days of sitting on your big mining stocks and harvesting cash flows are over, and the management is telling you as much. So just be aware that the big yields coming from the big miners are probably not going to be sustainable.
One of the things that really surprises me here, Gaurav, is just that, lithium, it's very abundant in the universe.
Yes.
I'm surprised that, because to your point about Argentina, my memory is it's 9 sovereign defaults the country's had.
Yes.
So
yes. I think it's more than anyone else. Yeah.
It's surprising there wasn't a better option that they could have. If this was the play, that this was where they've decided to do it. What's sort of so advantageous about this lithium deposit?
There's an area. It's Argentina, Bolivia, and Chile. They all surround the Andes Mountains, and what's happened is that over time, minerals from the Andes have leached into underground aquifers in those 3 countries, and that's created a very unique geological specimen, which is this briny lithium-rich water, not replicated anywhere else in the world. So it's just a happenstance of geography that you just happen to have this very lithium-rich brines in this area you can't really get anywhere else. And in Australia, of course, we mine. I still think if I was Rio, I'd be looking at Pilbara Minerals. I think that is such a wonderful project. with so much avenue for expansion and lowering of unit costs. They own 100% of it. It's an open share register. I'd be more comfortable with them paying $10 billion or more for Pilbara than I am with them paying up for this. So we'll see how that goes in the end, but that's probably my view of it. And Angus, to answer your question, yeah. So it's just a geography. They just happen to sit on the Andes where you do get this.
I have been to those salt flats many years ago, but I did not kind of realize it was such a lithium gold mine there.
Yeah, it's known as the lithium triangle.
Mm.
Yeah.
You didn't see any deck chairs?
I did not. I saw some horses and a lot of cactuses, but the flats. It is an extraordinary landscape. It's sort of this vast flat salt lake.
I think it's the driest place
Lake Eyre
on Earth, right?
Probably. I mean, the altitude is absolutely killer. They're the border crossing with Argentina. I believe it's the highest border crossing in the world. It's something like it's. I'm trying to remember what it was. 3,500 meters or something. The border crossing. So you get just flogged by the altitude. All the Bolivians chew on the cocoa leaves, and it's an amazing part of the world. It's really worth going to. It's extraordinarily poor. That high, the Atacama Desert, I think it's called.
It's the Atacama Desert. That's right. Yeah, I think it's the driest place in the world, and there's a lot of local fighting about water resources over there because these ponds actually do require a fair bit of water. And that's one of the downsides is that they're fighting with locals about sharing access to water. It's not an easy process. I'd much rather be in Pilbara and if you want a big lithium project, I think that's a far safer option than this. Gents, I think we've reached the end of the potty. I think that was fascinating. Thanks for bringing along your AI knowledge, Gus. I think we need to go into this in a little bit more detail at some stage. But if you can't wait for that, there is a 3-parter on Gus's AI thoughts on the website. So I highly recommend going through that. As I said, very informative and very well written.
Thank you so much. I hopefully, if I've said anything stupid, I'll listen to this later and add it to the comments. My new baby kept me awake till very, very late last night. So if there's anything stupid, I'll correct it in the comments. But thank you.
And Nick, given what you said earlier about intelligence being redundant, I can only say that it's lucky you got looks, because otherwise you'd be in trouble.
Oh, you're too kind.
Thanks for your time today, Nick.
No, thanks, guys. It's great.
And for everyone else, thanks for listening.